You know, you assume power in the Middle East is this highly visible physical force. You look at Saudi Arabia and you think, power is derived from royal bloodlines or vast oil fields or military might, but it isn't. The most critical figure operating alongside the Crown Prince right now holds no royal title. I mean, he commands absolutely no army. He's a former corporate lawyer named Mohammed Al-Jadaan.
Which means if you ignore this man, you are fundamentally misunderstanding how a multi-trillion-dollar economy is currently staying afloat. I mean, Al-Jadaan isn't simply a minister of finance processing receipts in the background. He is this single, heavily burdened point of failure holding up a deeply fragile architecture of sovereign debt and global capital. If his mathematical models fail, the entire system collapses.
Right, you're looking at an economy balancing on a wire, and he's the one calibrating the tension. We have to completely shift the paradigm of how we view authoritarian control here. Al-Jadaan's true identity is it's that of a finance engineer. He doesn't build power through ideology. He builds it through a strict techno-monopoly over the legal architecture of markets, debt instruments, and, compliance procedures.
Procedures he honed over 20 years in the private sector, operating his own firm in this strategic alliance with the London legal giant Clifford Chance. So he understands the mechanics of international capital better than, frankly, anyone in the old guard of the Saudi state, and he has effectively weaponized that understanding.
Which forces us to dismantle the first major structural illusion about the region, right? The whole concept of the rentier state. The mainstream explanation of Saudi Arabia is that it functions as this ultimate welfare state, a system where the monarchy buys absolute loyalty by distributing oil wealth and shielding citizens from taxes. The textbook social contract.
The state provides the money, the citizens provide the compliance. You see that repeated in literally every standard geopolitical analysis. The state acts as this distributor of infinite wealth, acting as a buffer between the population and, economic reality.
But May 2020 exposes a massive, fatal crack in that logic. Because amid the pandemic and that historic collapse in global oil prices, the Saudi government executed a maneuver that completely defies the established rules of authoritarian survival.
They completely revoked the civil servant cost of living allowance. Just gone. And simultaneously, they tripled the value-added tax. They went from a 5% VAT to 15% overnight.
So ask the uncomfortable question, why? Why would an absolute monarchy risk a massive social revolt by attacking the very foundation of its own social contract? I mean, you do not aggressively tax a population that has no political representation unless you were backed into a corner.
Because the survival of the macroeconomy on the global stage superseded the immediate comfort of the domestic population. The state was bleeding cash, running, a $9 billion deficit per quarter. Action was mathematically unavoidable at that point.
But the Crown Prince cannot be the one to deliver the pain. The monarch has to remain the benevolent provider. So Al-Jadaan employed this strategy of asymmetric risk. He deliberately made himself the lightning rod for public fury.
He literally stepped in front of the cameras and declared these austerity measures were painful but necessary. He absorbed the hit.
Exactly. He essentially shifted the fiscal risk from the sovereign balance sheet directly onto the shoulders of the retail consumer. The population absorbed the shock so the state's credit rating wouldn't have to.
So by acting as the designated pain absorber, he's protecting the monarchy from direct blame while saving the economy from immediate ruin.
Which leads to a crucial realization. True systemic power isn't about distributing wealth. It is the monopoly on deciding who absorbs the pain.
We see this exact dynamic of financial engineering applied to massive political events, too. Look at November 2017. The mainstream view of the infamous Ritz-Carlton Purge is that it was purely political.
Right. The narrative is that Crown Prince Mohammed bin Salman consolidated his authority by physically detaining hundreds of princes, ministers, business elites in a luxury hotel to eliminate rivals.
But the mechanical anomaly there is glaring. You don't just physically arrest a billionaire and instantly possess his wealth. How does a state actually process an estimated $106 billion in forcibly seized cash, real estate, and corporate shares?
You can't. You cannot simply inject that massive expropriated capital into the national system.
Right. If the government seizes 10% of a massive corporation overnight without a legal framework, they trigger an international banking freeze. Foreign investors flee. Domestic equity markets crash. You need a mechanism of extraction that traditional security forces just they do not possess.
You can lock a billionaire in a hotel room, but you cannot force a Swiss bank to transfer his assets to a state treasury just because you ask politely.
So the Crown Prince provided the physical force, but Al-Jadaan provided the institutional alchemy.
As the Minister of Finance, his actual task was to build the financial and legal plumbing to absorb those expropriated billions directly into the state treasury. He had to take the chaotic fallout of a political purge and transform it into a legitimate, transparent accounting maneuver.
Walk through the logistics of that for a second. He's utilizing his background as a corporate lawyer. He is overseeing the valuation of these seized assets, the transfer of titles, the restructuring of corporate shares. He's literally creating a compliance layer that makes an unprecedented domestic purge look like a standard, albeit aggressive, anti-corruption audit to the outside world.
And then he stood at Davos and publicly assured global markets that these funds were being cleanly routed into citizen support programs and the Public Investment Fund. He laundered the raw exercise of power into a balance sheet asset to rescue a depleted national budget.
Because without that bridge, without that compliance layer, the seized assets would have been dead capital. They would have been completely toxic to global markets.
So he stabilizes the regime's bank account with seized assets. But hoarding money isn't the Crown Prince's brand, right? Spending it is. Which brings us to the core conflict defining the current era of the kingdom. The battle centered entirely around Vision 2030.
The global perception is that Vision 2030 is this unstoppable, bottomless well of sovereign spending directed by Yasser Al-Rumayyan at the Public Investment Fund, the PIF. The assumption out there is they'll burn trillions on futuristic megaprojects like the sci-fi city of NEOM, regardless of the cost.
But the contradictions emerging in 2025 and 2026 shatter that perception completely. The flagship project, the 170-kilometer linear city called The Line, it was brutally scaled back to just 5 kilometers. The Asian Winter Games at Trujillo were delayed. Status symbol projects like the Levy Golf League are facing funding cutoffs after 2026. The massive Mukhab skyscraper was frozen.
Which presents a massive structural question. In a political culture where nobody ever says no to an absolute monarch, how is the Crown Prince's flagship vision being publicly and systematically slashed?
Because the utopian visionaries are losing an institutional war for capital that is happening just beneath the surface.
PIF's mandate is to spend aggressively to diversify the economy away from oil. But the Ministry of Finance's mandate is to prevent a sovereign default. You have the central bank, SAMA, whose reserves dropped from, $732 billion in 2014 down to $419 billion by 2023. Meanwhile, PIF's assets just ballooned.
That transfer of wealth hit a hard mathematical limit. And Al-Jadaan weaponized the data. He took a projected 2026 budget deficit of 165.4 billion rials, that's roughly $44 billion, and used it to defeat the PIF.
Armed with strictly quantified data from the National Debt Management Center and leverage derived from IMF assessments, Al-Jadaan became the only man capable of legally filtering royal ambition.
He transformed a liquidity crisis into an institutional weapon to discipline the state. He explicitly stated the government would cancel or delay projects without blinking if they threatened fiscal stability. In a system built on absolute authority, the ultimate veto isn't political, it is mathematical.
He successfully forced a shift from this paradigm of build any fantasy at any cost to finance only what has a clear return on investment. It's why projects tied strictly to hard deadlines, like the 2034 World Cup, survive, while the infinite utopian sprawl gets contained.
He used the cold reality of the bond market to overrule the architects of Vision 2030. If you cannot issue debt at a favorable rate, you cannot build a linear city in the desert.
And to Wall Street and Western markets, this makes Al-Jadaan the absolute hero of the story. In the spring of 2026, he chaired the IMF's International Monetary and Financial Committee in Washington. He met with U.S. Treasury Secretary Scott Bessent, signed unprecedented tax transparency agreements.
The international consensus views him as the rational safeguard, the adult in the room orchestrating a massive $57.8 billion borrowing plan for 2026 to safely bridge the kingdom's deficit through, structured bonds, syndicated loans, and...
Let's clarify what those Sukuks actually are. For global investors looking at the Middle East, a Sukuk is essentially an Islamic financial certificate. It functions similarly to a bond in Western finance, but it complies with religious law prohibiting the charging or paying of interest.
Right, so instead of earning interest, the investor owns a partial share in an underlying asset and earns a portion of the profit generated by that asset.
And Al-Jadaan is a master at structuring these to pull in massive amounts of global capital. But that illusion of safety hides a terrifying structural flaw.
Because if Al-Jadaan is the one checking the system, the question is, who oversees him? Look closely at his titles. He is the Minister of Finance, meaning he sets the spending limits. He is the head of the National Debt Management Center, meaning he issues the debt.
He is the head of ZTCA, the Tax and Customs Authority, meaning he collects the domestic revenue to pay the debt. And he sits on the board of directors for the PIF, the main spender, and Saudi Aramco, the main earner.
It's not just that he's the referee of the game. He's the referee, he owns the stadium, he sells the tickets, and he's the star quarterback. If he gets injured, or if his math is wrong, the entire sport ceases to exist. It is not a system of checks and balances. It is a totally closed loop.
The kingdom's financial architecture is entirely centralized in one man. And this was done intentionally, right? The crown prince views the old, slow, tribal bureaucracy of the Saudi state as an impediment to rapid modernization.
Centralization bypasses the gridlock. But this absolute centralization creates an extreme vulnerability. He operates as a single point of failure.
A single geopolitical shock could instantly crash the fragile debt machinery he has engineered to keep the deficit manageable. A severe disruption in the Red Sea shipping lanes, an escalation in the conflict with Iran, a sudden closure of the Strait of Hormuz, any of these events would instantly spike risk premiums.
Global capital would freeze. The borrowing cost for that $57.8 billion plan would skyrocket beyond what the state could service. He openly admits this on the international stage, warning that regional conflict is the greatest threat to the global economy.
Because his models assume a level of stability that the Middle East rarely provides. And this introduces a highly dangerous, unresolved knot at the center of Saudi Arabia's future.
We know Al-Jadaan is pushing the financial limits, transferring the fiscal burden to the population, and leaning heavily into global debt markets to maintain stability without entirely exhausting the central bank's reserves. We know the math he's using today works.
But we do not know the breaking point. If global oil prices drop permanently below $70 a barrel, the math stops working entirely.
The Ministry of Finance will not be able to simultaneously service the massive new debt load and maintain the domestic subsidies that prevent social unrest. If public anger over that 15% VAT and the rising cost of living boils over, the absolute monarch will face a binary choice.
Will the crown prince protect his brilliant financial engineer, recognizing that Al-Jadaan is the only barrier against a sovereign debt crisis? Or will he sacrifice him, offering up the architect of the austerity measures to save the regime's popularity?
You've been watching the headlines about glittering, futuristic cities rising in the desert, assuming they represent the inevitable, unstoppable future of unlimited sovereign wealth. But look closer at the underlying mechanics. That future is currently mortgaged to global debt markets, sustained only by the relentless calculations of a former corporate accountant navigating a massive systemic deficit.
The real question you must ask isn't whether the futuristic cities will be built. It's what happens to the kingdom when the man holding the ledger finally runs out of numbers.